Okay, here's a quick look at the emini S&P for Thursday, January the 6th, 2011. Um, we had mentioned on the video yesterday that we were looking at support, lower support at 67, upper support at 70. This was yesterday's market profile. This is the profile from the overnight session, and this is the profile from today. So you can see in the overnight session that 70 area held nicely with the low right here and then rallied all the way up to 77. Backed off a bit late in the overnight session and then opened here in the regular trading hours. It tried to move up, could not do so. Continued to use that 70 area here as a bit of a base, and then eventually broke through and came down, taking up the 67 by just 3 ticks, and then turning around from our support area and having a nice little rally up to I believe it was around 71 down from the 66 and change. So not a huge rally, about 4 points or so. We still think the market is in this up auction intraday. We expect the 67 area to hold. If it doesn't, then the next level down would be in the 63 area. And then, of course, our major support down here at 58. So really, these are the areas of support, support. If this support does not hold, that would be a very bearish indication, and then we would look for more follow-through lower. Now, what we've got to pay attention to tomorrow is the employment situation. Those numbers will be released at 8:30 a.m. New York time. And then, of course, Ben Bernanke of the Federal Reserve will be speaking at 10 o'clock. So that speech will not be released to the public until 30 minutes into the regular trading hours. Either one of those situations are likely to move the market. So we want to be on our toes and see if these support areas can hold and get some rejection off of them with a preference to being on the long side. However, if the news is not well received, then look for these areas of support to flip over if the market holds below 67 for a while, much longer than it did today, just 3 ticks today. Then it could possibly flip over and become resistance, and then we would look to 63 and then even possibly down to 58. So it doesn't, I believe the general consensus is likely to be met within a fairly close range. So I doubt if there's going to be anything out of the ordinary from the news, but then again, you never know. So those are the areas that we're looking at as far as for tomorrow's action. And we also use these market profiles that you're looking at right now from the regular trading hours in our analysis. So we had several trades today. I'll go ahead. This trade was not filled. This was the entry here. This trade was set up. The entry wasn't until this price, so it wasn't filled until much later, but we did not take the trade at that time. And I'll explain that in a moment. We also had another short trade here with an entry here. We did not take that trade either, which I'll explain in just a moment. On the long side, you can see we had a couple of trades here, one trade here, another trade here, actually another one here. It's not showing on this chart. So we ended up by this was actually the first trade that could have been filled. We didn't take that, and the obvious reason is that we knew that the 67 area, I'll just mark it in here, we knew that 67 was pretty important support, and this was an entry just a few ticks above it. So just 3 ticks above it, that's too close. There's not enough room to move, so we don't take a trade like that, even though we were in the red filter at that time. But we did take both of these trades here, and both of these were long trades. This one just kind of went sideways, so we got a 10 minutes break even, and this one had a nice move up, and that one moved I think about 2 points in our favor, so that was a nice little trade. We had a long trade here. We ended up by exiting after 10 minutes for a 3-tick loss. The market came down and triggered us into this trade, which, this trade here, I meant to mention something about that. When we're at known support and the known support holds as it did here, this trade, we don't want to hold on to it for too long. It's a type of trade that if the market comes up and tests it as it does here a few times, then we decide not to take that trade. So it's a pretty easy analysis to know that and to identify that in the current session, especially when we know going into the day that there's very, very strong support in the area down here, in this case around 67. This trade was a fairly aggressive trade. We were stopped out on it for 5 tick loss. We got into this trade right here and had a really nice run up to finish the day, so nicely profitable on that. So we had a series of trades today that didn't really do a whole heck of a lot for us. For some of our traders who are a little bit more aggressive, they would have had a really nice long trade right off this test here of the 67 when the market got rejected. And it had a nice bounce here of a quick 3 points. So that was a nice trade right there. And that's really it for today, our trades and our outlook on the market. Any questions or comments are always welcome. We like hearing from you and look forward to it. So send us an email, give us a call, whatever. You can reach us at info@eminidaytrader.com, and of course our phone number's on the website. So that'll be it for today. Thanks for watching the video, and we'll see you again tomorrow.